So know when to use these types of area patterns. Remember, majority of these types of indicators are momentum-based indicators, and they work very poorly when consolidations come. Try to be able to use 2 to 3 indicators together so that it can give you a fullness in terms of it. Each indicator you add there gives you more confirmation to your assessment of a trend. But please try not to use more than 3 at a time, because if you have too many indicators, you don't know who you're going to be listening to. And here's where many people joke, you become too much of an analysis that it paralyzes you, right? Analysis paralysis. So use 2 or 3 indicators. That's good enough for your particular standard. Use them hand in hand with classical analysis techniques. So that means classical analysis involves the use of trend lines, support and resistance, corrections, and area patterns. Those are what we call classical formations. Technical indicators are a new chapter into technical analysis, so that's why we separated that entirely. But use them together, then they can confirm each other, and that should give you a much more fuller assessment of the market condition. And of course, test to see which combinations work well. Now, the reason I put this down inside is because some of you may be trading small cap issues, mid caps, or large caps. Large caps tend to be slower, not all the time, but as a general rule, they are. Smaller caps move very quickly. The other thing is that liquidity inside smaller stocks are very, very low. And because of that, they could easily jump. They could go up 20, 30, 50% in a day and continue moving tomorrow. And that's why some newbies love to trade this particular stock, because it can present an opportunity. However, newbies, I would suggest that you master your indicators well, so you make sure that if you're going to go jump around like a trapeze artist in a circus, you have your safety net underneath. Because if you don't have that, all it takes is one big mistake and you're out of the game. So it's very important for you to know the tools that you have and make sure that that parachute you have is always worn. And when we talk about into our next webinar, when we talk about creating the trading plan and we talk about risk, we'll be able to make sure that you know how to be able to protect yourself no matter what it is that you do. But please, the first game over here is try to make a good, clear sense of your environment. Before you go into battle, make an assessment of the battlefield. And that's what everything we've learned up to today so far stands for. You're making an assessment of your environment so you know, should this be the battle I should be jumping into? Or are two sides shooting each other, and if I jump into right now, I'm going to get stuck in between, like a consolidation. And so you want to wait for the situation where one side of the war seems to be winning already, and that gives you better chances of following up with that, because you will be lined up with the victor, not against, of course, the one that will drive you down. Okay, so let's sum up what we talked about. We said technical indicators will help assess trend strength, and we said that if we see cracks into these indicators, it can also alert us of potential corrective elements and how far down should this corrective intent be. We studied 3 types of indicators. We looked at overlays such as your Bollinger Band and such as your moving averages. We looked at momentum gauges, just like your MACD and your stochastics and your DMI, and we studied an oscillator, which is like your RSI and also your stochastics indicator. Put together, these 3 indicators gives you a depth of perception that many new traders will normally not have. Know how to use them together like a filtering system. If you have 3 indicators in your favor, that should give you a 2 thumbs up to be able to follow on your trend move. If you have 1 indicator telling you not so good, but the 2 are still okay, you can still get away with it, and more likely you'll still make money in that trade. But if 2 indicators tell you no, and 1 indicator tells you yes, I will look for another trade, because I'm looking for something that will put much, much more meat into what I'm doing and give me a better chance of walking out in here making money. Okay, so we come to be able to complete our subject matter for today in terms of technical indicators. So I hope you get to practice them quite well. And I hope that you're still good with your robustness with what we talked about so far. So next week, we will talk about the trading plan. And we're going to talk about how to be able to build a plan or plan these trades that we do. It's important for us to be able to gauge this. I don't want to just jump into the market and say, okay, whatever happens, I will just hit. It shouldn't be that way. Your mind should be mentally prepared to be able to attack whatever happens today. You should also, like I said, assess your battlefield and understand, if this happens, this is what I'm going to do. If this happens, this is how I'm going to get out. So you should know how to plan your entry, how to plan your exit. And always make sure that the management of risk comes along with anything you do in trading, because at the end of the day, something out of the blue could happen, pull our perspective out of whack, completely go against us, and we have to be ready to be able to submit to what we have to do. You cannot put yourself in a situation where prices are falling, you're stuck in a position, and you're stunned, you don't know what to do, and all you do is just say, bahala na, and I hope something good happens to me. That's a driver who's taken his hand out of the steering wheel and says, I hope I don't bump anything and I don't crash. So please, two hands always in the wheel. The control element will always have to be there. Use your gauges. You know how to do that now inside your car, and use that speedometer, use your signal lights, use your rear view mirror, put them all together to make your driving experience a nice and profitable one. All right, so I leave you again, and I'd like to say thank you for those who have managed to be able to watch her, and I hope that you managed to be able to learn a lot from today's session into technical indicators.